Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks as always for having me.
Tim, any update on the non-quantitative easing? And is it also giving us a false picture of what's happening with the U.S. economy?
Oh, boy, I think so. And yes, I do have a little bit of an update on the non-QE QE. That is a terribly confusing subject. And I certainly don't claim to be an expert on the non-QE QE, but as best I looked into it, what I think it boils down to simplistically is that it's a liquidity issue. It's a liquidity crisis. The banks don't trust one another, and it comes down to a demand for dollars. The Fed stepped in to try to provide liquidity, and it's not because of a banking crisis, from what I understand, or a liquidity crisis, I should say, in the U.S., but more so because of a loss of confidence with the European banks and the U.S. banks not wanting to loan to the European banks. There is, back in 2009-10, the QE was designed to try to stimulate the economy. And here it's about, it appears to be, about liquidity and keeping the, repo rate down in check. Back in 2009, it was, they were trying to stimulate the economy through, borrowing and economic growth, and they were buying longer term T-bonds. Here, again, it's liquidity and the purchases of short term T-bills. Now, one argument I have also seen is that they say, well, what's the difference? If it's long term or short term, if it's trickling into the market, well, what difference is it? It's still QE. And, I would argue maybe, well, what if it's not really trickling into the market? What if that's perception based on, the original QE? Everybody saw that the QE back in 2009, 10, so forth, that caused resulted in the stock market bubble. So now it's the perception, because everybody's talking about being QE, like, oh, it's QE, so it's stimulus. So maybe that's a false perception, which I think I kind of tend to think that probably is the case. Back in 2000, 9, 10, and so forth, I would argue that QE, on the one hand, was a complete failure. And when I say complete failure, I mean, yes, absolutely. It generated the bubble. I think that was probably an unintended consequence. When I say bubble, the equity bubble, but it did not generate economic growth. And I think that is a false perception. If you look at the hard data, and we'll get into that in a minute, but yes, the QE, the non-QE QE that we see here, I think it's about liquidity. Then I think it was definitely about trying to stimulate the economy, which I would argue gave us the bubble, but failed to stimulate the economy. And, as far as the current economy, I would argue that, that everything that we're seeing pretty much here is based on a phony perception. Pence and I'm not picking on anyone. I'm not playing politics. I mean, they're the people in charge, so, I'm not picking sides with politics. But, Pence last week, I saw the interview, saw the headline. I mean, he came out, a pretty bold statement. He said, we have the best economy in the history of the United States of America. It was a headline, it was in bold, and the best was in all caps. The best economy in the history of the United States. And, Trump, he came out and was talking about how the manufacturing numbers were a blowout. And, unemployment is at the lowest level in 50 years. Yet he turned around, the same week, and he said that, manufacturing was being held back by a strong dollar and the ridiculous Fed policies. So, which is it? If the economy is so strong, why are the manufacturing numbers being held back? If the economy is so strong, why is it that the Fed actions are not enough? If the economy is so strong, why are the Fed actions even necessary? Why are the blowout numbers in manufacturing not reflected in the ISM numbers? Why is it that if so many jobs are being added, why is it that the job growth is actually contracting and has been for years? Why is it if the economy is so strong that consumer credit is contracting and has been for years? I say years, I don't have the charts in front of me. Some of this stuff started contracting in 14, 15, some of it in 11. I think the consumer credit numbers that I was looking at, the contraction actually began in 11. I think it was 11/11, if I remember right. So, I think that where we're at is that we're sitting on top of this massive equity bubble that was generated from, I guess the foundation of it was the QE, the real QE coming out of 2009. And like I said, the attempt was to jumpstart the economy, economic growth and through lending and in a real economy. And that part failed. And we've ended up here with this massive, I would argue, instead of the best economy in the history of the United States, it's the largest bubble in the history of the United States. Hell, it may be the largest bubble in the history of the world. But we don't have an economy to support it. And what we're seeing now, there has been no economic growth. If you look underneath the surface, they tout these GDP numbers and these unemployment numbers and all that. Well, I cover that. That's beyond an interview here, and I'm not trying to be a salesman to sell my letter, but I cover that in the letter. It's hard data. You can't dispute the data. There has been no economic growth from back in 2009, or really since 10. I mean, yes, there was some coming out of 2009. There was a rebound, but then it immediately flatlined. Looking at the numbers, there's been no hard economic growth, and now we sit here with this bubble, and what we're seeing is a big con job, if you will, to try to keep this thing alive. It's a juggling act, and we're being told that these numbers are so great in order to try to instill some level of confidence to try to, again, stimulate, growth, stimulate the economy, hold it together. It's a very fragile act. And like I said, it's happening here at the top of, I would argue, the worst financial bubble in history.
We'll have more with Tim Wood right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. I'm speaking with Tim Wood. Tim, is part of the illusion caused by corporate stock buybacks being at record high levels? So the value of the stock is boosted and maintained, but they haven't created any new products or built new factories and so on.
Yes, absolutely. That's a factor. There's many factors to this, and yes, that is a contributing factor for higher prices and, higher earnings per share through the phony accounting and that sort of thing. But yes, absolutely. That is indeed a factor.
Mm-hmm. Where's the U.S. dollar going to go with this huge asset bubble?
Well, I think that part of it's tied to this liquidity issue, and I'll never forget. I lose track of time. I believe it was early 18. We talked about the dollar bottoming, said there was a major bottom in the dollar, and the surprise ahead would be the stronger dollar, and the dollar has held in there pretty well. It has been up since then. Now, more recently, we've seen the dollar's just kind of been treading water. I have some intermediate concerns for the dollar, but longer term, I think the dollar is going to, at least what I see at this point, I think the dollar is going to maintain, going to continue to be strong, relatively strong, and I think it's a result of, like I said, and from a technical and cyclical sense, it's from a result of the cycles that bottomed. I think more fundamentally, it's a result of the demand for the dollars and liquidity.
Is this a case of the U.S. dollar may not on its own be all that strong, but everything else around it is so weak that it appears to be strong?
Yeah, and it may be the case of that. Well, it is a reserve currency, and it may be the case of like they say, the cleanest pair of socks in the laundry type thing. But yes, I mean the dollar is the reserve currency of the world, so hard to dispute that. And I do think also what we're seeing with comments like President Trump made last week, and then Christina Lagarde came out with some similar comments, and I don't remember exactly what it was she said, but similar comments of trying to target the dollar verbally to talk it down. And so I think there is some attempt to do that, but that's because of the dollar strength, and they would like to see the dollar weaken. And it's like I said, it's hanging in there. Intermediate term, I do have some concerns, but I think it's corrective, and that the dollar overall will maintain strength.
We'll have more with Tim Wood right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's the long-term outlook for U.S. interest rates?
I think we're going to see still lower rates. The economy, I don't think will support higher rates at all. And I think that the economy is going to checkmate interest rates and force lower rates. I know that there's talk that I heard it secondhand. I didn't hear it, and if I heard what I think the person told me, because it was in passing, that Powell's speech yesterday, he said that maybe they were going to try to hike once in 2021 or something like that and stay pat. He's talking a year out. But, as based on what I see with this economy, I think that is more talk to try to instill confidence of the economy and that things are okay and that, it's a confidence game. But looking at the reality We have seen rates bounce a little bit, short-term rates more so since November, the longer-term rates since August. But I think these are counter-trend bounces, and I think that as this materializes, that we will see rates go lower, which will force the Fed to cut.
Gerald Celente, publisher of the Trends Journal, I've just talked to him, and he'll be featured on our interview on This Week in Money, which is released Saturday morning. And he said, I don't see the markets crashing or a recession in 2020, but he sees what he maybe termed a super recession in 2021. And if Trump is reelected, his name will be along with Herbert Hoover as presidents who presided over monstrous economic crashes. Do you think that might be a good long-term prediction?
I think it may be. You know, I by the way, I like Gerald Celente. I've never met him. I've seen some of his work. I've seen some of his interviews, and I like Gerald Celente a lot. I don't know. I'm surprised, honestly. I think a lot of us are. A lot of the analysts who've been around a while and, you know, historians and looked at this and seen how far this thing has stretched. I think a lot of us are surprised it's lasted this long. I certainly have been. I mean, I make no bones about it. I'm absolutely amazed that it's lasted as long as it has. They've done a masterful job at trying to keep this thing going. And, you know, does it last that long? I don't know. Gerald may be 100% right. I don't know. What I do know is that, like I said, it's like a hollow corpse. This thing has been, it's built on air, and it's just one big con game, really. I mean, I don't know how to describe it, to keep it going, you know, these false narratives to try to instill confidence, to try to, you know, to get some sort of economic growth going. Can it go on for another year and Trump reelected? I think if it does, then he's I would think a shoe-in that he would be the next president. If it is not held together, you know, for the next year into the election, then I don't see him going back in. Obviously, I think the economy is going to dictate that. Can they hold it? I don't know. I will say this. I think we talked about this maybe in a show or two ago, but I think that, you know, it's been so stretched for so long. It's such a dangerous market. And I think that the more they stretch, the more you push the envelope, you know, the more the rebound is going to be once it cracks. And what I suspect we see is a setup. It's going to come from nowhere. It's going to seemingly come from nowhere. I've studied the bubbles of the past, and when you look back, it doesn't matter. You look back at 1929, even 1987, 2007. You look back even at non-equity related markets. You look at, you know, the sugar bubble. I think that market was up 6,000% or something like that in 1973, 74, whenever it was. You look at it, you know, the gold market in 1980. You look at any of these markets. There are signs, there are structural signs that it's at a top, and it snaps so quick. The thing is, what makes this so treacherous is that every time you get to one of these little crossroads, if you will, it's morphed away. They manage to, I think they know the danger of this thing, and they manage to prevent it from, you know, that setup from getting traction and prevent it from potentially happening. Just because you have the setup doesn't mean it's going to happen, but you have the setup, it gives it the possibility of happening. And so I think what's going to happen is we're going to get one of these, you know, I don't know if it's tomorrow, 6 months from now, or 2021 after the election, but it is one hell of a bubble. It is, and the setup is going to happen, and I think it's going to come quick, it's going to snap, and it's going to look like the Artgo stock in China. It's just going to break. And there's going to be absolutely nothing can be done at that point because it's been pushed so long. It's kind of like, it's like breathing. You know, it's great to get a breath of air, but hell, you have to exhale every now and then. I mean, it's just healthy. It's part of nature. And that's being prevented. So at some point, yes, there's going to be a tremendous price to pay And that's one of the main things, like I said, it makes this so dangerous here. But it's really what we're monitoring so closely in my research is waiting and watching for that setup, and then recognizing it and understanding the potential when we go through those crossroads.
Is gold going to be a safe haven, or if the market goes, everything goes?
I tend to think that if gold goes, everything goes. We're seeing a little bit of a bounce here in the raw materials. We're seeing a little bit of a bounce here with gold. Now, silver has broken. Gold is not confirming the break in silver or vice versa, however you want to look at it. The gold stocks are holding up better than expected. So I think what we're seeing, a friend of mine described it as a period of tranquility. And I think that's kind of where we're at, and this may be just a little temporary pause with gold and commodities, I'm thinking at this point.
The calm before the storm.
I think so.
Mm-hmm. Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.